It's my hot review of the SBR exam December 23. So what came up and what are the key takeaways? Now, I haven't seen the exams yet. What I'm telling you is based on many conversations I've had with my students. Now, whilst I don't publish my tips, I do write 2 original mock exams which my students sit on my rented area on the ACCA's practice platform. And I was chuffed that in the December 23 exam, we had a cash flow coming up and we had a group balance sheet coming up, because that's exactly what I prepared my students for. Both questions, of course, involved number crunching on a pre-populated spreadsheet. The balance sheet question was a step acquisition. So there was a previous holding of 10%, and then the parent company bought a further 60%. NCI had to be calculated, of course, and this time it was based on a proportion of net assets. There were fair value adjustments. There was stuff on intangibles. Sounds fair to me. Now, cash flow is a little bit more of a Marmite topic. Some of you love it, some of you hate it. And the takeaway is that you've got no control over what comes up in the exam. So you have to cover the syllabus in full. There was a cash flow in the December 23 exam. And that means that there could well be a cash flow in the March exam or the June exam, because the ACCA can examine any part of the syllabus in any exam that they want to. You have to be prepared. Ethics always comes up at question 2. And somebody told me that they felt that all 5 ethical pillars were being examined in the same scenario. A temporary accountant, not caring about the data, customer data, not really taking it seriously. A temporary accountant preparing cash flows to support the going concern in the future, but not really caring about what's going on. And maybe in some of these ethical questions, there's bullying and behaviour issues going on as well. I love ethics. I think it needs to be taught well. I think students need to be encouraged to think about the practical application of the ethical principles. It's an area of the syllabus without a great deal of technical learning, but it's about understanding the principles and how they are applied. And that comes through question practice. And of course, earning those professional marks is all about the action points and linking the principles to the specific case. Question 2 also in some exams had a big chunk on segmental reporting, which anyone who knows me knows is not my favorite accounting standard. Doesn't stop it being tested though. And identifying the business segments. And I think the trick here was that one of them was a cost center. And if it's a cost center, even though it's being reviewed by the chief operating decision maker, it doesn't qualify for classification as a segment in its own right. Now, whilst question 2 on ethics always contains some soft skills, some writing skills, question 3 had credit impaired financial assets, and therefore some discussion and calculation of the lifetime of expected credit losses. So pretty tough. Look, across the 2 papers, there was also stuff on revenue, stuff on impairment, stuff on provisions, calculating a pensions, defined benefit pension scheme. Pretty standard stuff. Remember that this exam is not about achieving 100%. It's about getting a pass. And in order to pass, you have to be marked out of 100, which means you have to JMO, just move on. So you've got time to do question 4. And question 4 isn't really a current issues question, although they may have flavours of current issue there. Climate change. Climate change came up. And the accounting impact when everybody's moving to electric cars. What are you going to do? You're going to have to write down your existing cars, perhaps. What are investors interested in? And why are they interested in, climate change? What's the investor focus there? So interesting, because it makes you think. You can't go into the exam with a pre-prepared answer, technical definitions that you regurgitate. I love SBR. But other people got question 4 on leases, sale and leaseback, making sure that you understood the principles and could explain them. And I think that was a lovely question, because it also then went on to talk about KPIs and how the impact of recognizing assets and liabilities on a right of use basis and accounting for sale and leaseback affects users, affects the ratios of the financial statements. Again, a question that would have made you think in the exam. So if you sat the exam yesterday, put it behind you. What is done is done. And I hope that you can get some rest and have a happy Christmas.